Well, again, it really just depends on rate expectations. We were slightly surprised, after the last Fed meeting and with the CPI surprise earlier in the month, that we did have that pop in Fed terminal rate expectations, close to 4, which is where we think it should be, at least 4. But that's since come down as a recession risk has come to the fore. But as Chair Powell said yesterday, the focus is still going to be on inflation, and until we get back to that terminal pricing of 4 or higher, I think equity and risk sentiment is still going to trade relatively heavily.
One area of your research particularly caught my eye because I used to be based in Singapore until last year, and looking at the growth of APAC stocks particularly, you're saying we're too early to say we're at the cusp of an APAC equities wave, but there are pockets of opportunities over there in Asia.
Certainly it is the case, because the Asia cycle, dominated by China, has somewhat been dislodged from the global cycle, which normally isn't the case. And considering these exporters, we've got good valuations on a currency basis and underlying equity basis as well. But a lot depends on, now that China seems to have turned the corner with its lockdowns, are we going to see more demand and pick up ahead? That could benefit the region, especially from on the commodity side, but also in a capital goods, where the likes of Korea and Japan, Singapore as well, can actually benefit. Early days, but if I just look at, for example, steel inventory at Chinese ports, that has come down to a 12, 13-month low. So clearly building is happening. And if they're going to need more iron ore, that could benefit Aussie, that could benefit the Brazilian real. So some things are stirring there, but again, it's early days.
Yeah, it is early days, but where we had the kind of zero COVID policy, which obviously massively affected the Chinese equity market and everything coming out of that as well, equities markets, I should say. At the same time, you seem to see the government kind of loosening some of its approach towards restrictions on tech companies. Do you think that's going to have a major impact?
That is going to have a short-term and medium to longer-term impact. So I think what Beijing has realized is that this is the area where China can really deliver strong returns, not to growth, but to employment. If you ask any Chinese official what's the most important target, yes, you'll get a headline GDP target, but it is the employment target that is the most important. And 10 million new graduates coming into the labour market as we speak right now, amid a weak growth environment. How can you pick that up very, very quickly? What's the low-hanging fruit when it comes to creating jobs? It really is through tech, through innovation. Beijing has realised that, so they want to give an environment of regulatory certainty for companies to go out and expand and hire. And I think international investors will be a part of the process as well.
And Geoffrey, just as I was walking through the performance of some of these markets to the year to date so far, we talked about the 1970s. I know you've been looking at that a lot in your research over at BNY Mellon at the moment. What lessons do you think have been learned? How is it different this time?
Well, so 70s, we did have the oil shock and stagflation as an issue. And I think we did learn that if you are going to be behind the curve, not just in terms of the level of terminal rates, but also the pace of it, then the issues can linger. Not just supply issues can linger, but the monetary scarring can linger as well. So this is where, coming back to the present day, I think one of the key lessons, not just for the Fed, I think the Fed's learned that already, with its latest move, but for the ECB and for European central banks in general. We saw the Riksbank. The more you do right now, the earlier you can do it, the more you can actually bring things back to, I'd say, normality and anchor inflation expectations. If you leave it a bit too late, I'm really specifically speaking to the ECB right now, and just try to wait things out, then you could have a more prolonged problem. So a bit of a short-term pain, but medium-term stability. I think that needs to be the lesson. So with the Swiss National Bank and Riksbank, those who would normally try to maintain a policy gap with the ECB, now they are leading the way. I think that really is a turnaround. I think Madame Lagarde should really ponder the situation with the Executive Board and the Governing Council very, very closely.